This is Economy Watch, what you need to know about New Zealand's economic life today. Brought to you by interest.co.nz.
Kia ora, and welcome to Thursday's Economy Watch, where we follow the economic events and trends that affect Aotearoa. I'm David Chaston, and this is the international edition from interest.co.nz. And today we lead with news commodity prices go into reverse as the Chinese post-holiday rally stumbles only after a brief shine. It's an ominous sign. But first in the US, there was a sharp fall in mortgage applications last week, down 5.5% from the prior week. That was because interest rates moved sharply higher after the strong non-farm payrolls report. But current application levels are running 55% higher than a year ago. Those higher interest rates are also showing up in the latest well-supported US Treasury bond auction, this one for their 10-year bond. The medium yield came in today at 4.01% and well above the 3.61% at the prior equivalent event a month ago. And Hurricane Milton is about to hit just south of Tampa and Florida more generally. Analysts say it could cause $60 billion in insurance losses apart from the far greater uninsured damage. Milton and Helene may be trigger events for widespread change in the way insurance cover is offered. Risks are rising fast for those who underpin these coverages. US Fed minutes for the September 19 meeting were released earlier this morning, and they show the Fed's 50 basis point rate cut was well supported and seen as a quicker way to align it with progress on inflation in their labour market. It suggests this was a one-off move, and future moves will be more regular. Remember, the September CPI data for the US will be released tonight, and it is expected to slip from 2.5% to 2.3%. Japanese machine tool orders rose in September from the weak August level, but they remain 6.5% lower than year-ago levels, which it should be noted were unusually high at the time. Taiwanese inflation fell to near its lowest since the pandemic, down much more than expected to 1.8%. In India, their Reserve Bank also reviewed its policy rate yesterday and left it unchanged at 6.5% as expected. They see their economic expansion continuing and inflation broadly in line with the midpoint of their target of 4%. Inflation is currently running at 3.65% there. However, their commentary does open the door for the next move to be down, which will be their first rate cut since May 2020. In China yesterday, the Shanghai stock market lost steam rapidly after the post-holiday euphoria. It was down 6.6% on the day as skepticism grew about what Beijing is doing and not doing to recover China's expansion mojo. It is a telling signal. In Australia, they reported second quarter dwelling commencement data yesterday, and it continues to retreat as apartment building remains especially weak. Of course, low supply coming on stream isn't helping housing affordability there, and rent inflation is still running at over 7% there. The US Treasury 10-year yield is now just on 4.07% and up 4 basis points from yesterday, and the price of gold will start today at $2,609 an ounce and down $2 from yesterday. Oil prices are 50 US cents lower at just over $72.50 a barrel in the US, while the international Brent price is just over $76 a barrel. And the Kiwi dollar starts today at 60.6 US cents and down 60 basis points from this time yesterday. Against the Aussie, we're also down 60 basis points at 90.2 Australian cents. Against the euro, we're down 40 basis points at 55.4 euro cents. That all means our trade-weighted index starts today at 68.9 and down 50 basis points from yesterday at this time. And the Bitcoin price starts today at $61,782 and down 1.1% from yesterday. Volatility over the past 24 hours has been low at just on plus or minus 0.7%. You can find links to the articles mentioned today in our show notes, and you can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.